Hi all, this is Steve Miley, the Market Chartist, and we're now going to take a look at the pound versus the US dollar and the euro versus the US dollar for forextraders.com. Well, we've seen on here the pound versus the dollar. Part of this weakness in here we've seen in cable pound dollar has been due to the fact of US dollar strength. US dollar strength from mid-September in here, a more hawkish tone from the Fed after the September FOMC meeting, and generally Fed speakers certainly shifting to a slightly more hawkish tone, very much anticipating now a rate hike at the December meeting at the end of the year. So that's accounted for dollar strength. However, this acceleration we've seen in here over the last week for early October, primarily a reaction in here to a weakening of the pound, and that weakening of the pound because of the fact that there's certainly some political situation within the UK has got to a more uncertain tone with some potential leadership challenges to Prime Minister May. So that's allowed for the pound to go lower. And then on Friday we also had the US employment report, and although the actual non-farm payroll data was worse than anticipated, far worse than anticipated because of the hurricanes Harvey and Irma, the average hourly earnings data was better than anticipated, so that's positive for the dollar as well. So the pound weakening and the dollar strengthening, pushing cable lower, accelerating lower in October, technically through this 131.47 level in here is important, and that shifted the intermediate term outlook from bullish to neutral, and there's real threat now down to this 129.03 level. And should we take that out, and we see it better here on the daily chart, should we get through 129.03, we would look for a much more bearish tone for cable then going into October. If we look at euro versus the dollar in here now, a similar tone. We've got a head and shoulders pattern, a weakening of the euro and a strengthening of the dollar. Again, a more hawkish tone and an anticipation of rate hikes from the US. And then on the euro side, a slight weakening this week in here for the euro post the Catalan poll that we had, and the repercussions potentially for Spain. And if we get down through 116.61 in here for the euro, we would certainly see a more negative shift, a more bearish shift for the euro versus the dollar. This has been Steve Miley, the Market Chartist, on behalf of forextraders.com, and I wish you a great trading week.